Hey everyone, and welcome. Today, we're going to pull back the curtain on the world of investing. And look, this isn't some complicated, exclusive club just for Wall Street pros. Not at all. It's actually a powerful tool that literally anyone, and I mean anyone, can use to build a much stronger financial future. So let's dive right in. I want you to just think about this for a second. What if your money could make more money for you, all on its own? While you're working, sleeping, whatever. That's not some trick question. That is the entire beautiful idea behind investing. At its core, it's really simple. Investing is just using the money you have today to buy things, we call them assets, that you expect will be worth more down the road. It's how you're getting your money to stop just sitting there and start actively working for you. It's the engine that builds real wealth. All right, so here's our game plan. First, we'll get a bird's eye view of the investing world. Then we're going to zoom in on the three big players: stocks, bonds, and real estate. And then, the best part, we'll lay out exactly how you can make your very first investment step by step. Any good builder needs a solid set of tools, right? Well, when it comes to building wealth, your tools are different kinds of investments, or asset classes. We're going to start by exploring the three foundational tools that are really the bedrock of almost every investment portfolio out there. First up is the one you've probably heard the most about: stocks. And listen, forget all the complicated charts and squiggly lines for a minute. At its heart, the idea of owning a stock is incredibly simple. It really just comes down to one word: ownership. So what is a stock? It's just a tiny piece of ownership in a company. Let's imagine your favorite local pizza shop decided to sell off little slices of the business itself. If you buy one of those slices, guess what? You're now a part owner. So when that pizza shop does really well and makes a lot of money, you do too. That's a stock in a nutshell. Okay, so how do you actually make money doing this? Well, there are two main ways. The first is called appreciation. That's when your slice of the pizza business becomes more valuable because the whole restaurant is growing and succeeding. And the second way is through dividends. This is awesome. It's when the company has a great year and decides to share some of its profits directly with its owners, which now includes you. And historically, that growth has been pretty amazing. Over the long haul, stocks have delivered average returns somewhere in this range, year after year. Now, that might not sound like a huge number, but trust me, over decades, that is the kind of growth that can turn a small, regular investment into some serious, life-changing wealth. And this really drives home that long-term power of being an owner. As Investopedia points out here, if you look at the big picture over time, stocks have historically beaten pretty much every other major type of investment out there. It's a real powerhouse. But being an owner isn't the only way to play the game. So let's shift gears completely. Now we're going to talk about what it's like to be the lender. Welcome to the world of bonds. It's a totally different but super important role to play. A bond is basically just a loan. It's an IOU. Let's go back to our pizza shop. What if, instead of selling a piece of the business, the owner just needs to borrow some cash to buy a bigger, better pizza oven? You could lend them that money. In return, they promise to pay you back the full amount later, and for the whole time you're lending them the money, they pay you interest. You just bought a bond. You're the bank. Now, the main reason people love bonds is their predictability. They give you a steady, reliable stream of income from those interest payments. And because you're a lender, not an owner, there's generally a lot less risk involved. At the end of the loan term, when the bond matures, you get your original investment back. Simple as that. So this is the fundamental trade-off right here. With stocks, you are an owner. That gives you a shot at much higher returns, but it definitely comes with more risk. With bonds, you're a lender. That provides more stable, predictable income, but usually with lower returns. Owner versus lender. That is the key difference you've got to remember. All right, our third major wealth-building tool is one you can actually walk up to and touch. We're talking about real estate. This is all about owning physical, tangible property, stuff you can see and feel. Real estate investing is pretty much exactly what it sounds like. It's buying property, like a house, an apartment building, or even just a plot of land, not to live in yourself, but with the specific goal of making money from it. And you know what? Just like with stocks, there are two main ways to profit. First, you can create a steady stream of cash by collecting rent every month from people who live there, your tenants. And second, you can make money from appreciation. That's when you eventually sell the property for a whole lot more than you paid for it. Now, when we look at a chart like this, which only shows price appreciation, it kind of looks like stocks are the runaway winner. But, and this is a huge but, this chart doesn't tell the whole story, not even close. It doesn't include all that rental income we just talked about. And it doesn't account for one of the most powerful tools in real estate, leverage. That's where you use a mortgage to buy a huge asset with only a little of your own money. And that can seriously juice your returns. So this table really puts it all together. You can see the big trade-offs. Stocks are highly liquid. That's just a fancy word for how fast you can turn it back into cash. It's super easy to buy and sell stocks. But real estate, it's the total opposite. You have a ton of control, but it can take months to sell a property, so it has low liquidity. And bonds, they sit right there in the middle, playing that stable, reliable lender role. Okay, we've covered the what and the why. Now it's time for the best part, the how. Let's talk about making your very first investment move, because I promise you it is so much easier than you probably think it is. Let's just get one thing crystal clear right now. Starting to invest does not mean you have to become some expert stock picker or save up $1 million to buy an apartment building. No way. The modern investing world has created some incredibly simple ways for beginners to get in the game. Think of these as your investing easy buttons. First, you've got index funds and ETFs. So instead of trying to buy one slice of that one pizza place, these let you buy a tiny crumb of every major company out there all at once. Then there are robo-advisors. These are amazing automated services that build and manage a whole portfolio for you. And finally, REITs. These let you invest in big-time real estate like shopping malls and office towers without ever having to fix a leaky toilet. So here it is, your action plan. 3 simple steps. Step 1, just pick one of those easy options we just talked about. An S&P 500 index fund is a fantastic place to start. Step 2, open an account. You can do this in minutes on a popular investing app or an online brokerage website. And step 3, start. Seriously, you can start with $5. The amount doesn't matter at first. The most important thing is just to get started. I absolutely love this quote because it is just so true. It is so easy to look back and wish you'd started years ago. But you know what? That doesn't matter. The incredible power of your money growing on itself, compounding, needs time to work its magic. And the absolute next best time to give it that time is right now, today. And that brings us right back to a question. You've seen the tools, you understand the basic ideas, and you had a simple 3-step action plan. The only thing left to decide is, what is your first move gonna be? Thanks so much for watching.